Hey everyone, welcome back to Corporate Decoder, the place where we decode the business world. Today, we're diving into Kohl's Corporation's latest filing, and let me tell you, it's a bit like finding a clearance rack where everything is final sale. Some good deals, some things you might want to pass on. We'll break down what's really going on with this department store giant. Get ready for a mix of strategic shifts, executive changes, and the all-important numbers that tell the real story. This document is a proxy statement, which basically means it's a way for shareholders to vote on important company matters, even if they can't attend the annual meeting in person. It includes proposals for things like electing directors, approving executive compensation, basically how much the top bosses get paid, and other key decisions. This year, the meeting date is set for May 14, 2025. It also gives important dates and deadlines, like the record date for shareholders to be eligible to vote, which is March 12, 2025. Think of this as your invitation and rulebook for the shareholder party. Speaking of the meeting, it will be held virtually, of course, on May 14, 2025, so you can attend in your pajamas. One of the main purposes of the meeting is to elect 10 directors to the board. These are the people who help steer the company. The board of directors wants you to vote for all 10 nominees. There's also a vote on executive compensation. This is where shareholders get to give their opinion on how much the top executives are being paid. The board wants you to vote for approving their pay packages. Think of it as an up or down vote on whether you think the executives are worth what they're getting. The board also wants you to say for on the third proposal, which is to approve the appointment of Ernst & Young as the company's accounting firm. Finally, we have a shareholder proposal asking for a vote on executive severance payments. The board wants you to vote oyensect this one. We'll dig into that a bit later. It details how many meetings the board and its committees held and how often the directors attended. This part shows how engaged the directors are in overseeing the company. It mentions that most of the directors are independent, meaning they don't have any close ties to the company that could influence their decisions. This is important for good governance. Let's take a quick look at who's on the list. You have people like Wendy Arlin, a former CFO, and Michael Bender, who used to be the CEO of iMart Express. There's also Ashley Buchanan, now the current CEO of KOHLS, and Yael Cosette, a digital expert from Kroger. There are people from various backgrounds, lots of experience in retail, finance, and technology. The document highlights the skills each nominee brings to the table, such as expertise in retail, finance, technology, marketing, and operations. Notice that while the board values diversity, cybersecurity experience is not very strong. Now let's look at the numbers. In 2024, net sales were down 7.2%. That's like losing $7 out of every $100 you used to make. Diluted earnings per share, which is the profit the company makes per each share, that went down about 13 million. That's good news, showing they're trying to get their finances in order. Finally, $222 million was returned to shareholders. They also opened 5 new stores and closed 4 stores. And of the 9 about $11 a recandum percent $, 2022 $2 million was returned to shareholders. They also opened 5 new stores and closed 4 stores. And closed new company makes money from its operations, was 27% on payment and administrative expenses. Also known as SG&A. It means they cut some costs in areas like marketing and salaries. Since the debt went down about $113 million. That's good news, showing they're trying to get their finances in order till finally $22 million was returned to shareholders. As for the strategy, KOHLS wants to enhance the customer experience, simplify pricing, manage inventory better, and strengthen the balance sheet. Let's see how these intentions translate into reality. This section talks about how the company pays its top executives. It's designed as a pay-for-performance model, meaning they get rewarded for doing well and penalized for doing poorly. One significant change was making the incentive plan payout bigger if they hit maximum goals. The board wants shareholders to approve the compensation packages for the top executives. The documents mentioned that in 2024, the variable or at-risk compensation for executives was lower than in previous years, and no payments were awarded because financial performance goals were not met. This is where KOHLS talks about its commitment to ethical practices, human rights, and looking after the environment. It's like their pledge to be a responsible corporate citizen. The company paid Ernst & Young $2 law review fees. The audit committee pre-approves all services provided by Ernst & Young to ensure they are not in any conflict of interest or ethical violation. Here's where the board explains why they don't support a shareholder proposal about having a shareholder vote on executive severance payments. They argue that they already have policies in place to prevent excessive payouts, and that such a vote would limit their flexibility and make it harder to attract good executives. Scrolling down, this is where we get into the nitty-gritty details of what the top executives actually made. Remember, this data is from 2024, so we can use this to see who actually earned what after a year of ups and downs for KOHLS. It appears that Mr. Buchanan, the new CEO, had a total of $20,936 in compensation, and former CEO Kingsbury had $11,036 out of $800. The numbers are not the most interesting part of this data, but it's worth mentioning they are lower than 2023. This table is about equity, the stock-based awards that executives receive. All executive officers listed here own shares of KOHLS with a value of over 1 million, so at least their personal wealth is on the line. Now, what does all this information really tell us? First off, KOHLS had a challenging year. Sales dipped, and they're still trying to find the right formula to bring customers back into the stores and onto their website. However, the board is making an effort to refresh its membership, bringing in people with a variety of backgrounds and skills. While they reduced expenses, the sales numbers are hard to ignore, and they're clearly trying to implement some cost-cutting measures here. On the shareholder proposal, the board seems to be drawing a line. They believe they have the situation under control with their existing policies, and they don't want to tie their hands too much when it comes to hiring and firing executives. It's important to note that some of the numbers like the CEO pay ratio are estimates and may not give the full picture. And remember, this is all backward looking. The real test is whether KOHLS can turn things around and adapt to the changing retail landscape. Now let's get to my opinion. KOHLS is at a crossroads. The company needs to innovate and adapt and needs fresh ideas, or it will not survive the competition. That will require bringing in some innovative thinking and people. While they talk a big game, actions speak louder than words, and the numbers show that they are struggling. While their executive team pay isn't crazy high, it's also not linked with shareholder performance. That's a red flag. The company is at a very high level of risk. They have a lot of issues, but are struggling to implement changes. Also, what is with these guys wanting so badly that you vote against shareholder proposal that could help protect shareholders from bad decisions? Thanks for watching. If you enjoyed this financial and business deep dive, be sure to subscribe, like, and comment, and I'll see you in the next one.